I'm not financial advisor. This is not financial advice. Okay, welcome back to day 3. Today we're gonna be talking about liquidity. So this is where it starts to get a little bit more serious. Okay, the rest of the concepts I'm gonna be explaining starting today are gonna be concepts that you'll be using daily, and you have to master and you have to get down. Then you'll make trading very easy. So liquidity. What is liquidity? Liquidity is the most important thing in ICT trading or any trading in general. Okay, liquidity is basically targets on the chart. What does that mean? So you have to identify liquidity points. So how do you identify liquidity points? Liquidity points in the most basic terms are swing highs or swing lows. Okay, so if you go back to yesterday's video and you watch, I was talking about what swing highs and swing lows are. So example, this is a swing high because the two wicks next to it are lower than it. So the middle wick is the swing high, and swing low is like this one. Okay, so go watch the previous video. But basically, in short, liquidity is swing highs and swing lows. So why is it swing highs and swing lows? So you gotta understand, if you trade ICT, basically you won't be trading retail. I mean, I call it retail strats, but I mean ICT strat is also retail strat. But essentially, when people trade support and resistance slash trend lines, which is a type of strategy, usually they will put their stop losses at lows or highs. Okay, what's a stop loss? Is essentially whenever you enter a position, all right, you will have an entry point, which is this middle line. Okay, and your bottom line is your stop loss, and your top line is your take profit. And these are limit orders. That means the orders will not execute until price moves up and hits them. Okay, so a stop loss is essentially like a safety net on how much you can lose in one trade, and your take profit is essentially how much you can make. So let's say I enter here. If price moves down like that and hits this, I will lose set amount of money. So that's a stop loss. And let's say price moves up here and hits this point, I'll make a set amount of money. So that's what stop loss is and what a take profit is. And essentially, when people trade, majority of people like to place their stop losses at swing points. Okay, so swing points like these, or like these, you know, or like these, this, it can be anywhere. The most common stop losses will be at swing points. And why is liquidity so important? It's because the market draws towards liquidity. All right, you need liquidity in the market for the market to move, and in order for there to be more volume, okay, the market has to move towards these points to fulfill the orders or the stop orders or whatever, in order to inject more liquidity into the market for the market to move. Okay, so if you look at an example, let's say I consider this swing high a liquidity point. All right, there's two ways you can use liquidity. You can use liquidity as a draw, which means where you think price will draw towards, or you can treat it as like a liquidity sweep. So what a liquidity sweep is after price hits a liquidity point, which you think is a very common stop loss placement like this one, then price will move in the opposite direction. So that's what a liquidity sweep is. It's essentially liquidity getting swept. That's like the only way to put it. It's stop orders getting filled once it hits this area, and then price using that volume to move in another direction. All right, that's a liquidity sweep. So you can use it as a draw on liquidity once again, or you can treat it like a liquidity sweep, waiting for price to react off that point. What are my most used liquidity points? Number 1, you got data highs slash data lows. Okay. Number 2, equal highs slash lows. Number 3, trend line liquidity. Number 4, liquidity in imbalance. Alright, for number 4, I'll be talking about imbalance another time, so don't really worry about that first. But essentially, what are data highs, data lows? Data highs, data lows are essentially wicks or abnormally large wicks that form because of news events that cause price to be a lot more volatile and a lot more wicky. Alright, so what are data highs and data lows? If you look on forexfactory.com, alright, this is a website that shows you all the news events. Data highs and data lows is essentially wicks that are abnormally large, abnormally long, which are caused by news events such as these. Okay, if you look, yeah, any red folder news can cause large wicks. And today we had news at 11, so this wick is a data wick, a data high, and you can use it as a draw on liquidity. Okay, so you can treat it like price will want to come and hit this point. Okay, if you have any questions, I know liquidity is one of like the most difficult but important concepts that you have to learn. But yeah, okay, so just take note, data highs and data lows, which are wicks caused by news events, and Forex Factory is a very important website for you to check when red folder news is going to occur, and that's when you can look to have a drawn liquidity at the data highs slash data lows. Alright, next, equal highs and equal lows. So what are equal highs and equal lows? You're essentially just going to find 2 points on the chart which are in line with each other. It doesn't matter whether they're right next to each other or if they're far apart. You're going to find either 2 swing points, swing highs, or 2 swing lows that are equal. So this is an example right here. You have 2 points. I mean, these are right next to each other, so it doesn't really count. Oh, there you go. You got one set right here. So these are equal highs and equal lows. Okay, you see how these 2 swing highs are exactly on the same price level. I don't know if I can find like, okay, so you have equal lows right here. See that? These 2 points, equal lows. And most of the time, if you backtest means go back in time, look at the charts and search for these equal highs and equal lows, or any of these liquidity points that I have mentioned. Most of the time they get hit. Okay, so just this example right here, you got equal lows here, and once price came up, it did eventually hit this mark again. So oops, right there. Okay, so equal highs and equal lows. Number 3, you have trendline liquidity. What is trendline liquidity? Essentially, you're gonna have liquidity that essentially forms a trend line. I don't know how else to put it, but if I look here and I draw a line from here down to here, you see how price kind of bounces on this trend line here. Boom, boom, boom. This is low resistance trend line liquidity, and you can expect these points to get hit, which it did. If you look, after price reverses, it did hit most of these points except for the last one. Probably hit on like ES or something. But yeah, trend line liquidity. And number 4, liquidity in imbalance. Next video I'll be talking about what imbalances are, but for now I'll just show you an example of liquidity in an imbalance. Just now when we found the equal lows, oops, there. Alright, let me just draw a line for this equal low. Oh, there you go. Alright, this is an example of liquidity in an imbalance, and what an imbalance is a fair value gap, which is what you'll be learning next video. But I'm just going to draw out a fair value gap right now. From this you can kind of tell, oops, from this you can kind of tell what a fair value gap is. So just take note of those 4 points. Sorry, just take note of those 4 liquidity points for now. But just remember that the main gist of liquidity points is where people place their stop orders, and you can also just say, honestly, every swing point, every swing high slash swing low is a liquidity point. So if you guys have any questions on liquidity, I know it's a little bit difficult to understand You just have to practice and look for liquidity points, and then you'll get better at identifying them. Yeah, just drop your questions in the comments below. I'll try to answer all of them. And yeah, so main points, remember, liquidity can be used as a draw on liquidity where you think price is going to hit, or you can use it as a liquidity sweep. So once liquidity has been hit, you await a reversal. And liquidity can be any swing high or swing low. And I also mentioned the top 4 liquidity points that I like to use. So those are the key points you have to remember right now. In future videos, I'll be going more in depth about liquidity, and you'll get to hear and see more examples as well. So drop your questions in the comments. I'll see you guys tomorrow, and we're going to be talking about fair value gaps and imbalances.